Hey guys, good afternoon, everybody. Today is Tuesday, May 23rd. It is 2:01 right now. Our scheduled mentoring session is for 2 o'clock. So I'm going to go ahead and set up this room real quick and we'll get started with our session shortly. Got a couple of things here to update and we should be good to go. All right, so a few more things here, guys. Well, let me get this link sent out to you guys over here. Perfect. So I'll get a few moments.
You live that has pickles and like bullies and everything. Everyone down here does.
There you go. All right. I'll get a few moments for people to make their way, guys. So good afternoon, everybody. Today is Tuesday, May 23rd. It is 2:03 right now. Our scheduled mentoring session is for 2 o'clock, so just on time. Let's get a few moments for people to make their way in and we should be good to go. All right, see who's here so far. Hey, CJ, how's it going? Let's get a few more moments. So we have one question from, let me see. We have one question from, what was the question? One question from William. So William is asking if we can cover the high-low scalp strategy. So we'll go over some examples of that. And then if you guys have any other questions, feel free to put your questions in the chat. I don't really have anything lined up. So if there's anything that you guys want me to cover, feel free to ask away. There's not really too much to cover because I've been covering the liquidity push for like the past couple of weeks now. If you guys want to see more examples, I can show you guys, but for the most part, it looks like for today, main topic is going to be the high-low scalp. And then we will, we'll go from there. Hey, Dan, how's it going? All right, perfect. So it looks like basically the majority of people are here so far who plan to attend. We'll start with some high-low scalp examples. Sorry, guys, market's closing right now, so MC4 is kind of going on and off. All right, Martha wants me to cover the V1 variation. So we're going to start off with the high-low scalps, and then we'll go over V1 variations as well. So let's start with the high-low scalps. Let me just go over here real quick I'll just rewind it to like 8 o'clock. I don't know if there was any entries today, but we'll see if there was anything that came up over here. All right, so nothing here. Nothing has pre-market. Let me just go forward real quick. I'm gonna see if there's anything that came up at all today during New York session. I don't think so, because I don't remember seeing anything here. The market was actually a little choppy today, so I don't think there was really much to work with here. See if there's one here. No, not really. So the problem with identifying these types of entries after they've happened is that we can't confirm what the overall trend was. Typically, when you apply the high-low scalp strategy, you need to confirm the overall trend. We'll use, actually, this is not an example here. There's no sell signal. All right, so I don't think there was any high-low scalps today at all. At least none that I personally saw. We'll just use this as an example here. So there's one right here. I can't remember what the bias was for today. I'm gonna assume that it was bearish. But I will go over the criteria here. All right, so if you guys are just joining the room, guys, we're going over the first question. First question is from William. He was asking if I can go over the high-low scalp. So here's an example that came up today. I can't confirm what the overall bias was because I can't remember what it was this morning. But we're just going to assume that it was bearish. Let me put up the criteria over here for that specific strategy. This is the high-low scalp. So in order to apply the high-low scalp, first you want to confirm the overall bias. As I mentioned, we can't confirm this because this is in the past. Right now it's 207. So we're about like, you see this entry came up at 11, 12, 1, 2. So about 3 hours ago, this is where this entry came up. But I'm going to go over the criteria. So this is obviously a sell entry right here. We can't really confirm what the bias was, but we're just going to assume that it was bearish. Retail sentiment, in order to confirm that, you need to make sure that the retail sentiment is majority on the buy side. So you want this to be above like 60 to 65% long. It's not necessary. You need an overall bias, not necessarily a complete bias. So overall bias here, there's no sentiment here. It's not really useful for us because it's pretty much neutral. So the next step is to look at the fundamentals. So looking over here at the fundamental bias, you can see over here that the Dow is currently, or it was down 231 points. So we can see that this is bearish right here. To confirm the bearish bias, you want to make sure that it's below 100 points and consistently below that number. Right here, you can see it's down 231 points. So we can assume that 2 hours ago, price was below 100. So with that said, we do have a fundamental bias for a sell. And for the technical bias over here, we can't really check. I mean, we technically can. And you can see here it's bearish. It's bearish because price is below the pivots. The trend meter is red across the 5 and 10, and the pivots are all angling down. So with that said, we did have a bearish bias for the 1 minute time frame at time of entry. So with that said, we can confirm that there was a bearish bias there. So step 1's complete. For step 2 over here, you want to confirm that the previous high low using the K2 high-low indicator. So right here, this is the previous low. You can see that this candle here, or this price point, was never tested. Every candle that passed after it did not touch the candle, right? So with that said, this high-low here has been established. Next step, you want to confirm price breaking close past the previous high-low. So this candle right here broke and closed past this high-low. And with that said, we can move on to step 4. So for step 4, you want to confirm that you're trading the direction of momentum using the K2 momentum indicator. To do that, you just want to look back to the most recent momentum indicator or most recent momentum signal. Right here, we have a sell signal, right? There's no buy signals in between. So this is the most recent momentum signal. So we know that we're looking for sells here because momentum is bearish. So with that said, we have a sell signal here. We have a bearish momentum. We know that we're trading the direction of momentum. For step 5, you want to confirm that price is not ranging or consolidating. You can see here that price was ranging for a bit. And I'll show you an example of that here. So price was ranging temporarily, but then this candle broke and closed past it, right? So breaking, closing past it, broke it outside of that range. So with that said, we do have a entry here for a high-low momentum or a high-low scalp. Lastly, step 6, you just want to confirm that price has not touched the previous swing before the break and close. I already covered that. You can see there's a low here. Price did not come down and touch it. So with that said, it's an untested high-low. Once you've confirmed all of that, you can enter the trade on the open of the next candle for 100 pips. You enter a short position right here for a sell. Go for 100 pips. And it's the entry right there. So once you let the trade run, you can see right there, it blasted right through a TP. And there goes an example of a high-low scalp that happened this morning, or this I guess morning still, it was at 11. So this entry came up at 11:12. I typically don't trade this late in the session, but some people do. If you guys did trade, this would be the example of a high-low scalp. So there goes the example there. Let me see if I can find one more example. There's another one right after it, actually. So let me just leave that marked up right there. Let me go to this one right here. And here is another one right here, William. So I'll just show you real quick because you can see that these do come in bunches. Sometimes if you get one, you typically get another one right after. So here goes another one right here, William. So I'm going to go and mark up this low right here. You can see that this low has not been tested, right? None of the candles here touched it. It's pretty much been untested. Overall bias was bearish. We confirm that again. Step 2, confirm the previous high low. There's a low right there. It's never been tested. Confirm price break and close past the previous high low. This candle here broke and closed past it. Step 4, you want to confirm that you're trading the direction of momentum. We already confirmed it. We have a bearish momentum right here, or a sell momentum, whatever you want to call it, bearish or sell, same thing. 5th, you want to confirm price is not ranging or consolidating. Again, as I mentioned over here, guys, price was ranging, but it broke past the structure, so it's no longer ranging at that point, right? Lastly, you want to confirm price is not touched. I confirmed that earlier. This confirmation is very similar to like step 2. So step 2 and step 6, if you confirm both, it's pretty much the same thing. It's just, I break it down into multiple steps so that it's easier for you guys to identify. So once all those are lined up right there, again, there's another high-low scalp entry right here. Same thing, quick 100 pips. This is kind of similar to the liquidity push, except it's just a little more, like you wait for a better confirmation. You're just not entering right away. You're kind of waiting for the confirmation for it to continue dropping. But I mean, either way, they're different strategies, but they're very similar. So again, right there, same thing, price blast right through. Two high-low scalps right after each other. And then, on top of that, there's like there's other entries here that could have been taken as well. So as you guys can see, the question that I get a lot is like, people ask like, what strategy is the best strategy? There's no best strategy because they kind of come up after each other. They're like, you'll see a lot of my strategies are very similar. They all complement each other. Like you'll have one entry and then you'll have something that lines up right after it. And they kind of just align with each other. It's basically the same type of trading style, just different entries within. Like you can have one big move like this right here. You can have one big move right here, right? Like a big trend. But if I was to break down how many entries came up right here, I can just like point them out to you. There's like a V1 variation somewhere over here, another V2 or V1 variation. You have a momentum scalp that comes up somewhere around here. There's a momentum scalp right there. This is also a pivot scalp entry. You have high-low scalps right here, another high-low scalp. You actually have a high-low momentum scalp right here too. Here's a higher high, price broke and closed past pivots 1 and 2. So you guys can see if I just counted how many entries came up within this little time period right here, there was like 1, 2, 3, 4, 5, 6, 7, 8, like 8 entries that came up within this period. So, question I get from Hussein like every day, and it's funny because you ask the same question every day, but my answer is always going to be the same. It's not going to change. You always try to figure out like what's the best strategy, and there's no best strategy. They all work. So, you see there's like 8 different entries here that came up. You could be applying just one strategy. If you block in that 1 entry a day or 2 entries a day, then you're pretty much solid, right? It's not about quantity, it's about quality of trades. So like you can take 1 or 2 trades as long as they win and use proper risk. You could make as much as someone would make taking like, 10 or 20 trades a day. Like one person in the group, Sisuk's not here right now, but Sisuk a long time ago, this guy would take like 50 trades a day. He could have just focused on like, 1 or 2 trades and just increased his lot size and made the same amount. But he understands now that that's the key, right? So it's really just understanding where your strong points are and where your weak points are and focusing on your strong points. So if you're really good at high-low scalps, then just focus on the high-low scalps. If you're good at high-low momentum scalps, then focus on high-low momentum scalps. You just got to figure out what works good for you, because what works good for me doesn't necessarily mean it's going to work good for you, right? It's not equal to everybody. Not everybody can follow directions properly, especially if the strategy has more complex requirements. So just depends. Let me go down the questions over here real quick, and then we'll go over Martha's question, which is the V1 variation. So William said, thank you. I got it. High-low scalp ready for tomorrow. Perfect. No problem, William. Hussein said, thanks for such a simplified explanation of the high-low momentum strategy. So again, Hussein, that was not the high-low momentum. That was a high-low scalp. They're two different entries. So a high-low momentum would be this one right here. So a high-low scalp, and this is the difference between them. High-low scalp is a breaking close past structure, right? So you have structure right here, which is a low. This candle right here did not break and close past it, right? So this right here would be a high-low momentum. High-low momentum and high-low scalp are completely different strategies. That's why I keep telling you to just focus on one or two strategies, because if you get these two mixed up, you're going to make mistakes, right? So just stick to one strategy at a time. This right here is a high-low scalp. The high-low momentum that you referred to is this strategy right here. So there's a higher high right here, and let me put the criteria here, and I'll put the criteria for both the strategies so that you guys can see. This is a high-low momentum scalp, and this is a high-low scalp of what we just covered. They're completely different strategies. The requirements are nothing alike. So you want to make sure that you don't confuse these two. Saying, I know you're kind of excited and you want to like learn all the strategies, but it can be overwhelming. If you try to learn too much at once, it may be a little too overwhelming and you might make a lot of mistakes, and that's not what I want for you, right? I want you to make proper moves, and I want to make sure that you're profitable and you stay profitable. Because if you mix these two up, you can make really bad mistakes because they're totally different strategies. So for the high-low momentum that you just referred to, this is a high-low momentum scalp. So if you look at the criteria here, first you want to identify a higher high, which we do right here at step 1. Step 2, you want to identify a valid momentum signal using the momentum indicator. We have a sell signal right here. That's going to be valid because there's a red candle within it. Third, you want to confirm that price breaks and close past pivots 1 and 2. You know, as I mentioned before, if this is too confusing with the pivots, then just turn off 3 and 4. Because you really just need 1 and 2. So that's step 3. You confirm that price breaks and close past it, and then you can enter on the close of the candle. So this one's actually a lot easier. So you might like this one better. It's just a lot easier to follow. There goes the entry right there. There you go on the next candle, go straight through the TP. So this right here would be a high-low momentum scalp. Totally different strategy. They both have high-low in it, but this one has momentum in it. The other one doesn't have momentum. So that is the difference. Hussein mentioned such occurrences happen quite often throughout the day. How many trades do you suggest to take during the day? Hussein said, okay, great. I understood now. Instead of taking many trades with a small position size, it's better to take 1 or 2 setups with a bigger size. Yeah, exactly. So just focus on like 1 or 2 setups that you're really good at identifying, Hussein. The thing that you have to keep in mind is that not all entries are going to be rated equal, right? Like, for example, if you have an overall bias for a sell, then like say, for example, you have a sell entry here, right? And you have an overall bias for a sell. Say the fundamentals are down like 200 points. Technicals are very strong for a sell. And then say, for example, you have a strong retail sentiment bias as well. If everything's pointing towards a sell and you have an entry for a sell, then yeah, you can load up on that trade. Just make sure that you don't load up too heavy. So like max you want to risk is like, for a trade like this, you want to risk maybe 1.5%. You want to risk 3% because this trade could be very risky depending on like when you're trading it. Also, I'm not sure if there was news today at that time. Let me check the calendar. There's no news, so I think it would have been a smooth entry. If you saw a sell entry there, fundamentals are bearish, technicals are bearish, retail sentiment's not there, but if it was there, you know, it'd be a quality entry. So, yeah, you know, for me, like if you want me to lead by example, just look at my trades. I take 1 or 2 trades a day, right, Hussein? I don't take like 20 trades a day. I take 1 trade a day, and I'm pretty much done. So, you know, focus on maybe 1 or 2 trades, like of strategies that you really like. Use other strategies as confluence, but, you know, just focus on one strategy. So like, for example, you can use the high-low momentum scalp as your main strategy, but you can use other strategies as confluences. So like, for example, there's a high-low momentum scalp here, but the same candle has multiple entries on it, right? So this is a pivot scalp entry as well. And I think it would probably even be a momentum scalp. Let me see if I can turn on the multiple time frame signal. And yeah, see how there's a gold bar right there? This is a momentum scalp entry as well. So it's basically like three strategies in one. So if like they all have high win rates, then you have three strategies lining up in this one candle. You know, the odds of this candle hitting or this trade hitting is probably like, you know, a 90 to 95%, if not more, probability of hitting. So that's what I mean about quality, right? You want to go for an entry that you know for sure is going to hit. Because if it for sure hits, then you're locking your profit for the day. You're pretty much done. So, yeah, that is pretty much it for those questions there. Let me go up. Martha wants me to go over the V1 variation. So let me see if I can find any examples for that. V1 variation. I think I saw one over here somewhere. So I'll see if I can find any here. The only reason I'm looking over here is because we already know what the bias is, right? The bias is already bearish. It's already confirmed it on the last entry. So, okay, here's a V1 variation, Martha. Is there anything specific, Martha, that you are confused with the V1 variation? Because I can cover like if there's a specific thing, because you know you've been around for a while, so you know the strategy. It's not like you don't know it. So if there's something that like confuses you or there's something specific that you need help with, you know, let me know, because I want to make sure that I dial in on like what you need help with. Because this strategy, we've covered this strategy a bunch of times. I don't mind covering it again, but I just want to make sure that, you know, you're getting the help that you actually need, not necessarily, you know, a random example. Because I can pull up like, you know, hundreds of examples here. It's not a hard strategy to learn. But anyways, we'll just cover it real quick. And then if there's anything specific that you need help with regarding the strategy, then, you know, just let me know. Because this strategy is extremely simple. You're just looking for a double body or double wick, and then you're looking for something as well. Okay, no, that's fine, Martha. Okay, so for step one, you want to confirm the overall bias. We already confirmed that for the previous examples. We already knew price was bearish here. That's why I use this example, because we already knew it was bearish. So for step one, confirm overall bias. Retail sentiment was neutral. Fundamental bias was down negative 200 points. So that's bearish, and the technical bias here was bearish as well across the 1, 5, and 10-minute time frames. So for step one right here, this is going to be a bearish bias. Step two, you want to confirm a high low. So we have a high low right there. Step three, you want to confirm the candle following the high low is either a double wick or double body. You can see right here that this is a double body rejection. And if you want to confirm that, just draw a line over there, click on the magnet tool, click on the body. You can see that they're flush, right? So with that said, we do have a double body rejection right here. Fourth, you want to confirm there's a pending momentum in the direction of the trade. In order to confirm that, you just want to look back at the previous momentum. Right here is a green buy signal. Since you're looking for a sell right here, because of the overall bias, you want there to not be a sell signal most recently. So with that said, that this means that there's a pending momentum, meaning that the next momentum signal has to be a sell, right? So once you have that lined up right there, this is a V1 variation. You set this up with a 1030 split. You let the trade run. And you can see right there, it blasts right through a TP. And this is why you want that pending momentum. So see right there where that sell signal comes up, Martha? The reason why you want that is because if you measure the candle is typically going to be at least 100 pips. So if you have a pending momentum, this candle alone will get you to your TP. So that's why you want the pending momentum, because if you have a pending momentum there and you enter a reversal pattern, and you guys can see the storyline here. So here's the storyline of this trade, right? There's a V1 variation here, and then it's followed by a pivot scalp or a momentum scalp. Let me see if it's a momentum scalp entry. So you guys can see a lot of these, all my strategies, they all line up with each other. So there's another entry here. You have basically an entry right here. This is the start of it, V1 variation. It's followed by a pivot scalp. It's also followed by a momentum scalp. So you basically have a bunch of confluences here indicating that, okay, if I also take this sell here, it's probably going to hit. So that right there is a V1 variation. See, question from Martha. She said, so I want to see the momentum coming. I mean, it's part of the requirement, so you do need a pending momentum. No, it shouldn't be a flickering. Where'd you get that from, Martha? So I want to see where the confusion is, because it's not part of the criteria. If it's not part of the requirements, it's not something that you're looking for. So I'm just curious, like where you No, there should be no momentum. There's nothing developing, nothing of that. I think you're just kind of making up your own rule at that point. Pending momentum just means that there's no momentum there. That means that it's going to happen eventually, but it's not happening right now. Okay, so you kind of just made up your own rule right there. I think that's a problem that you run into a lot, Martha. And I think like, it's fine because a lot of people are like it. I'm like that myself sometimes. You kind of want to, you're trying to make it more complicated than it really is, right? So if you go back over here, there's no flickering momentum, right? So right here, the strategy is extremely simple. You're looking for overall bias. You're looking for a high low. You're looking for double bottom, double top, whatever it may be, depending on the direction of your trade. And there's no flickering momentum here, right? If I move forward, there's no flickering momentum. There's no sign of momentum coming right there. Momentum was going to happen eventually, but it didn't happen right there. The flickering momentum happened like way over here, right? The trade would have been done with at that point. You can see over here on the next candle, or sorry, it's not working right now, but the flick, let me see if I can refresh it again. Yeah, so the flickering momentum didn't happen until like way after. So the trade would have been done already straight to full TP, and the flickering momentum didn't happen until like way after. So flickering momentum is nothing. I don't have any strategy that requires that. So just try not to overcomplicate it, Martha. I know like it gets exciting because you're like, oh, I found something new, or you find something that you think you like, but try not to overcomplicate it because you're not the only person that does it. There's a lot of people who try to do that. That's why I try to make the strategies as simple as possible. But it's like when we have somebody who's been trading for a long time and they try to learn my systems, they think it's more complicated than it really is. Like they try to like add stuff because they're like, oh, Sean's probably doing something different, or he's looking for something different, and I'm not. I'm literally just following the criteria. That's the thing with trading. Like I feel like with trading, you have to keep it as simple as possible because if you have too much criteria, then you're just going to miss entries. Like if I was to look for a flickering momentum candle, I would have to be glued on the chart, right? Like I'd have to be staring at the chart like every second because if that was a strategy, I'd have to like wait for it to come up, and it's like impossible to find that. So, yeah, Martha, just it'll come with time. Like don't like beat yourself up about it because I know you kind of do beat yourself about it, like when you like don't get things right or if you make mistakes and stuff. But mistakes are due to happen. I've been trading for a long time now. It's not like I got this like off day one or like month one or even year one. Even Maddie's in the group. Like Maddie's like basically like he joined like last year and he's still learning stuff. He's good at trading, but he's not like 100% yet. Same with everybody else in the group, right? Like Sisuk has been trading with me for like, let's see, he's been trading for me for like, I think 5 years now. He still makes mistakes, right? He makes a ton of profits every day, but he still makes mistakes. Like you can see he took like a bunch of trades here. He's worked on his over trading. Because if you saw C6 trades like, okay, so like right here, he's making like X amount. Let me see if I could pull up one of his older trades. Like way back in the day, like this guy would trade. You guys like would not believe how many trades this guy would take. Okay, so let me show you what Sisuk did. This is May of last year. So let me show you what Sisuk used to do, right? So this is what Sisuk did today. He took 4 trades. This is from May 2022. See how many trades he took? This guy had like an addiction. It's crazy. He would make a lot of profits, but look at how many trades he would take. This guy would take like 100 trades a day. So everybody is a work in progress, guys. Don't expect to like be a master trader by tomorrow. Like I taught Sisuk here how to like have multiple accounts. So like now has like 3 or 4 accounts and they just multiply versus trading at like 100 times on one account. Like this is crazy. And you look at the timestamps, he's taking like so many crazy trades at once, like with between 6:26 up until within a basically a 1 hour period. This guy took like 20 trades. But he's killing me. He's making a profit, but this is so stressful. Like I couldn't imagine taking 20 trades. I would like pull my hair out at this point. He made 16,000 that day, but it's crazy. So that's an example right there. Yeah, Martha said, yes, I tend to overcomplicate things in my head unnecessarily, working on it. Yeah, no, that's fine, Martha. That's 100% fine. Like, you're gonna start to figure out what works best for you. Like for me, before when I used to like day trade and swing trade, I would have so many scenarios running through my head, and I would just get so annoyed at myself because I'd be on the chart all day, and if I lose a trade, I'd be so upset. Now that I trade like just in the morning with you guys, it makes things a lot easier. I don't have to like stress over like missing a trade or like making a mistake and stuff like that. I just take the trade. If I win, great. If I lose, that's okay too. But I know I'm gonna make it back. So yeah, hopefully that helps, Martha. If there's anything else you want me to cover, feel free to let me know. But that's the V1 variation, super simple. If you want another example, let me know, but it's a very simple strategy. You're basically just looking for a double body and then a pending momentum, not flickering, but pending. Sure, no problem, Martha. All right, let me scroll up real quick. Let me see what's the next question here. Question is from Hussein. So Hussein's asking, just wanted to ask about liquidity push. For example, if there is a level which matches with the most of the timeframes, is it not better to take those setups only? No, you're on the right path, Hussein. So those are actually the best setups to take because you have a multiple time frame confluence. So what Hussein is asking is basically, if you have multiple, and you will get that sometimes. So let me look at today. Or I mean, today's probably not a good example because there wasn't really liquidity today, was there? Actually, I think it was. Okay. So let me go over here real quick. Let me just show you guys what Hussein is referring to. So yeah, technically you can take those trades, but they don't always happen, right? They happen sometimes, but not like every single time. So let me go over here real quick and I'll just, let me go to the liquidity chart. So I don't have to like mess with the main chart. So let's go over here to liquidity. Let's go and rewind. So there was one entry today. I think the entries that came up today were on where there were multiple time frame confluences. So what I'll do here is I'll double line them, but I'll double line them a different color so that you can see and confirm that they're different. All right, so let's go over here to the daily time frame. But yeah, you're right, Hussein. There's nothing wrong with doing that. It's just that those types of entries don't happen very often. But if and when they do happen, they're more likely than not to hit. Like they're probably going to push through because you have a higher time frame confluence, which is always a better confluence than most others. I think multiple time frame confluences are probably the best confluence that you can have. That's why we created the momentum scalp strategy with 3 different time frames. So here's the daily liquidity. There's the 8-hour. So I think I messed up on one of these. No, it looks fine to me actually. I don't know why there was like a random line there. There's a high, low, high, low, high, low. They're fine. The 8-hour right here. So I'm basically looking for, okay, so if you go over here on the 8-hour, Hussein, you can see that there's a bunch of high lows that are already marked up, right? So the ones that are already marked up, they line up with the daily time frame. So if you were to line these up here, so we already started with blue. We'll change it now to, here, I'll just reline them again, but I'll color them a different color so it's easier to see. So we got one right there. Right here, let me do this first. Let me line up the ones that have not been, sorry. Okay, I'll just do this first. This is gonna be easier. So we'll color this red. So see how these I'm coloring red? It's because these are the same liquidity that I marked up on the daily time frame. They're just also lined up on the 8-hour, right? Go back to blue. And we'll just keep doing it as we go lower. So there's the 8-hour time frame. Here's a 4-hour time frame. See how this high low here is already marked up? Again, same thing. This is going to be, another level. So now at this point, we'll just color it red again. I don't want to color code it too much because it's already colored red, so I don't need to color it again. All right, let's go down to the 2-hour. right, so now you got a couple more high lows here. They're not on the same level, but whatever I color red will be multiple time frame confluences. Let's go down to the 1 hour. So again, right here, this blue one is now red. Oops. Blue one right there is now red because it lines up with the other time frame. Same with this one, that's now red too, and that's red too. So see how these line up, Hussein? So it's not really necessary because a lot of times they are going to line up. So I think, you know, if you're just focusing on those multiple ones, which is fine, it's just you're kind of like, you're narrowing your pool of entries if you do something like that. Okay, so we got another one right here. We're gonna go to that red. It's gonna be blue. Let's go down to the 15. It's gonna be red. Blue. Blue. And then lastly, let's go down to the 10. All right, so see how I did that right there, Hussein? Not that one. A lot of these here line up. So now let's go down to the 1 minute. So this line right here, you can see how it's blue and red. It's blue and red because it lines up with multiple time frames. So let's see what happens when price actually gets to that point, right? This wouldn't count down here because it didn't actually break through it, got close to it. Let's see what happens over here, right? This is the entry that we saw this morning. Same setup. It doesn't matter if it's double tested, it's still a faked out right there. If you remember from this morning, this was a fake out. I mentioned, okay, price is overextended. Look for the fake out, wait for it to come down. And then you can see when it finally comes back up right here, it blasts like right through it. So yeah, I mean, if you want to focus on multiple time frame confluences, you can, but it's not really necessary. They're all going to be important. So it doesn't matter whether it's double tested or, I mean, it's double lined up on multiple time frames. It's still going to be useful to you. So you just don't want to lower, you don't want to like minimize your pool of entries. Because if you were to just like say, for example, this wasn't a multiple time frame confluence, and say it was just one, like a 10-minute time frame, you wouldn't want to skip that just because it hasn't been, you know, lined up with the other time frames. Because either way, it would still work out. Yeah, no, you can do that too, Hussein. Hussein said I can also write text while marking like daily. I can write D. Yeah, no, exactly. You can do that too, Hussein. Like you can do that. It's just, it's a lot of work. And I only know that because I've done it before. So like, for example, right here, see how there's a line right there, Hussein? You just go to your settings. So you double click on the line, go to text, and you can put daily or 10-minute. So see right there where it says daily. You can like put down the top, you can put it to the left, you can put it to the right. It's up to preference. So you can see right there where it says daily, right? So yeah, it's actually really simple to do that. I used to do this before, but it just takes a lot of effort for me to do something like that. So, and for me, I don't like to minimize my my pool of my options. So, all right, no problem, Hussein. Let me scroll up real quick. So next question is from Dan. Dan said, hey, Sean, not so much a technical question, but I was wondering if you could talk a little about how you and your trading changed from average retail to a consistently highly profitable trader and what made the biggest difference in making that leap. You know, I think the biggest difference was me trading live, because when you're trading by yourself, you can make as many mistakes and nobody's going to hold you accountable, right? Unless you can hold yourself accountable. So for me, you guys hold me accountable every morning. Like I trade live with you guys every morning, same time, same day. I'm on a schedule, like literally every day. It's routine for me. And I can't make mistakes, because if you guys have been part of the group for a while, we used to get a lot of trolls in the beginning. So when I first started trading live, we used to get a lot of trolls where people would say like, oh, your strategy doesn't work, you're not transparent, or you're only showing wins and stuff like that. But I have like 5 to 7 years of live trading sessions now. So nobody can say that to me, right? Nobody can say I'm not transparent. Nobody can say that I'm not legit and that I don't know what I'm doing, because I'm like, okay, if I'm not legit, then go to my YouTube channel and watch, my live sessions. You can go to live sessions here. Like I have years and years of live sessions. So if anybody wants to challenge my trading, they can literally, I can point them to this page and like, okay, go and watch any live session and tell me where I'm not legit or I'm not transparent, right? I couldn't do that before because I only had like maybe like, a couple months of live trading sessions. So now I have like years and years and years of live trading sessions every single day. So, and you guys will see how consistent I am. I think this is what made me the most consistent, because I always felt like I had something to prove, right? I couldn't like screw up, because if I was to screw up, somebody would be in the chat the next day trolling me. So I think that's the biggest thing. It might not work the same for everyone else, because not everyone has that, that ability to stay consistent every single day. But I think for the most part, that's probably what helped me the most, Dan. Because every day I was trying to get better, I was always worried like, okay, what troll is going to come up tomorrow and try to challenge me and tell me that my strategies don't work, or tell me that I don't know what I'm doing, or that this stuff just doesn't, like, it's not real. So that kind of forced me and it pushed me to be better and better every single day. So now I just do this without even thinking. Like I trade with you guys and I don't really even think about it. I just take the trades, they hit profit, and it's just the same routine every day. So I think the main thing, Dan, is really accountability. The best way to get better at trading and just to be more consistent is to really be accountable. Like if you make mistakes, you got to like take responsibility for it. You can't just like push it under the rug and say, okay, I'll do better tomorrow. You got to like really check yourself and be like, okay, I screwed up this day because I made this mistake, or I didn't follow the strategy properly. Because I'm pretty sure you guys have seen that before, or you guys have done it yourself. You guys, whenever you lose a trade, you try to just act like it didn't happen. So I think that's like the main thing the main word of advice for you, Dan, is to journal your trades and document. I think like the problem with a lot of people too is that they don't like realize that they're making mistakes, right? So they just keep making the same mistakes over and over and over again. For me, I can't make those mistakes, because if I screwed up, like for example, today, if I screwed up and it's recorded on the live, if I ever screw up again in the future, someone will point that out to me, right? So in order for me to not make that mistake again, I just make changes and I make sure that I don't make those same mistakes. So yeah, Dan. Yeah, Dan, so that's cool. Thanks, Sean. I think I'll start posting my trades in the group every day for accountability. Then as I've been consistent, try to make too many trades. Yeah, exactly, Dan. So I think the main thing that you can do, Dan, because obviously trading live might not be the best option for you. What I'd recommend is to post your profits in the chat every single day, right? Like I do. So post your profits, whether it's a win or whether it's a loss, so that you can kind of check yourself. Like when you, like, even like if you look over here in the group, right? Like I think a couple of people had losses today, but they still posted up. Like they made mistakes. Like Andrew over here, he said he didn't really make a mistake, but his MC4 froze on him. So he was like, oh, he entered the trade late. So he understood that that was something that he needed to be checked with. I think there was another person here. Not Kenneth, Nick. So see, Nick's like, this is accountability. Like you don't even have to post it in the group, Dan. You can just send it to myself. If you're too embarrassed to post it in the group, which I recommend you just post in the group. It doesn't matter if you're embarrassed or not, right? You're never going to get better unless you really take accountability for the trades. But like Nick here sent me his trade. He said, got into that liquidity on the initial spike. He said, should have waited, right? So he understood that, okay, I made a mistake. I should have listened to Sean. I should have waited like I did. And then he ended up eating the loss. He ended up catching it as it came back up. He covered some of the loss, but not entirely. So, I think the main thing that you could do is either post up in the group, or if you're too embarrassed, just post up to me personally. I'm not going to shoot you out for it, obviously. I'm like, okay, just make sure you learn from it and don't make the same mistake in the future. Because that's the only way you'll feel responsible and accountable for the mistakes. Because if not, you're just gonna keep blowing accounts, right? I've seen you guys, and I don't want to name anybody, but you guys have seen people in the group who come and go. It's because they blow an account but they're too embarrassed to tell anybody, and then they leave and they come back a month later and be like, oh yeah, I had to take a break. We need you blew your account, bro. Like there's no, you don't just stop trading. Like if someone stops trading, it's because they blew their account. There's a reason why they stopped trading. You don't just like, if you're doing really well, you don't just stop trading. The only time you stop trading is because you can't afford like another account, which is completely fine. That's normal. But unless you like take accountability for it and you actually like you you really realize like, okay, I keep screwing up. I gotta do something different. You're probably never gonna get better. So yeah, Dan, if you ever want to talk to me, or if you want to talk to anybody in the group, people will help you through it. If you want to talk to any of the mentors, Sisu, CT, Kip, Maddie, anybody, they'll keep you accountable, but you really have to understand that like when you're making mistakes, you have to own up to it. All right, so let me scroll up real quick and see what else we're missing. So CJ's asking, was it a valid high-low quick scalp at 1050? Let me go check real quick. 1050. So it's kind of late in the session, so I wouldn't have taken it myself, but let me just check to see what you were referring to. 1050. I don't see anything here at 1050. CJ. Let me see. Let me go to a different time. 1050. I see one right here at 1102. CJ. I don't know if this is what you're referring to. It looks like it might be what you're referring to. Let's go over to this chart. It's easier to see. So you said 1050 right here. I'm gonna put a line there at 1050. So I don't see any momentum signals here for a oh, you're talking about a quick scalp. Okay, so I totally forgot about that strategy. It's been a long time. Let me just pull up the requirements for the quick scalp. I thought you were talking about a momentum scalp. High-low quick scalp. I don't even remember. Like, okay, there we go. 1 minute high-low quick scalp. So identify. And I'm assuming you're talking about a buy entry right here, right, CJ? So I'm assuming you're talking about a buy entry because at 1051, yeah, so identify bullish direction momentum. We have a buy signal right here. Identify a low using a high-low indicator. There's a low right there. Identify a bottom wick rejection following candle. Entry. Okay. So yeah, I mean, technically, if you're looking for a high-low, I mean, it would technically be off this candle right here. As soon as you would have seen the low at that point, you would have entered the buy, like right there. So it looks like it would have like blasted right through your TP. And if you held on to it longer, I mean, it still would have hit your TP either way. So this is something that you can't really back test. You have to forward test this because I don't know where this high-low came up from. So there's bullish momentum here. I can't remember if we used overall buys for this trade. I'm pretty sure we probably would have. So I don't know if I would necessarily use it. I wouldn't even take a buy here because we checked the overall buys for today, CJ, and it was a sell, right? So I probably wouldn't have taken, I mean, it still would have hit. Again, I don't remember if we used overall bias because it's not here in the criteria. But yeah, if you're just looking for the quick scalp, this would technically be a quick scalp entry. It looks like it would have went straight to TP because you had a bullish momentum here. There's a low right here off this candle. As soon as the low would have showed up, you would have taken the buy. So whether you took it initially or even a little late, it still would have hit your TP at that point. So I think there's like another one right here too. Or actually no, because there's a sell signal. But yeah, it's funny that you mentioned that because I haven't applied this. I remember when I first showed this to you guys, this thing was so lucrative, but it became super risky because like it would just happen too quickly. So yeah, I mean, short answer to your question is yes, it was a high-low scalp, a high-low quick scalp, but it's hard to tell when the market's already passed. All right, let's see. Next question over here is from Hussein. Hussein said, can I follow your exact trades while you Zoom live stream, or will it occur so fast that I won't be able to catch it? So that's what everybody's been doing, Hussein. I thought that's what you've been doing too. So I mean, short answer to your question is yes. That's pretty much what everybody does on the live stream. But you should be able to anticipate, like you should be anticipating it, because yeah, your question, you answer your question, you answer your own question with both of your answers. So yes, you can follow the same exact trades during the live stream, but it also will likely happen too fast. Like you'll have to like be able to anticipate it. Like if you don't know these strategies here, Hussein, you can literally like, you just miss the trade, right? Because it just happens so quickly. So yes, you can follow the trades exactly on the live session, but odds of you missing it are also very likely. So yes and yes to both of your questions. Yes, you can just follow live stream, but yes, you'll probably miss it if it's too quick. Because you should be anticipating it. Like for example, if there's an entry coming up right here, like see how this entry right here was a high-low scalp. This is a strategy that I told you to look out for, right? Like, yeah, the entry would come up. So you would see this on the live session if it was on the live, but you would have to wait for this candle to close. So if this candle is moving up and down really quickly, you wouldn't be able to anticipate it, right? But if you know the strategies, you're like, okay, there's a higher high right here. You're already checking off the checklist by yourself. Because we had a couple high-low scalps or high-low momentum scalps that came up today, which I missed myself, but other people in the group caught it. Like, so for example, this morning, I think it was TJ and Martha. They both caught like two different high-low momentum scalps, and I missed them myself because I wasn't paying attention. But they were following it themselves, so they saw it on the chart and they took it themselves as soon as it came up. So yeah, exactly. Martha said, yes, that's what happened to me in the beginning. I entered late and lost all the time because I wasn't anticipating the moves. And now I take the move Sean misses because I'm anticipating them. Exactly. So Martha here, you know, it's better to know the strategies and have the indicators so that you can anticipate it. And then you can take the trades as soon as they come up. So even if I miss it, you can still take it yourself as long as you see it coming up on the chart. Yeah, no, it makes a big difference because like, you know, for example, so you know, if you compare the two charts, like say, for example, you have this chart right here, which is blank, you don't have, if you wouldn't have indicators versus having the indicators here, you know, it makes all the difference. So this is 11, let me see, 1109. Here, I can actually put these right next to each other. So we're over here on the 1 minute chart. So let me put two charts right next to each other, one with indicators and one without, because it makes a really big difference. All right, so Hussein, imagine this right here. You have a chart with nothing on it, and then you have a chart with the indicators, right? It's like almost impossible for you to like anticipate this trade to come unless you have the indicators there to show you that it's coming. So right here, you have a higher high. Like there's no way you'd be able to identify this higher high right here, right? Because you probably wouldn't even see this as a higher high. Yeah, I know, but I'm answering your question, Hussein. So Hussein said he does have indicators, but I'm answering your question because you're asking if it's going to happen too fast. So yes, it would happen too fast if you're not anticipating it. So if you have the indicators and you're looking at it, you're anticipating the entry. If you know the strategies, you're anticipating the entry to come up. If you don't have anything and you're just like watching me on the live, you're not going to be able to take anything, right? Because you're not going to anticipate it. So, you know, my main thing is that I tell people is to like, don't try to find the easy way out. Like I see a lot of people who try to just they just try to follow the lives, which if possible, you can make profit on it, but you are going to miss a lot of trades. And you're going to get more frustrated because I see a lot of people will miss the trades and then they'll enter the trade super late. Like say, for example, it pushes down right here. And they just aren't paying attention because they aren't like anticipating the move, like what CJ and Martha mentioned. And then they enter like over here, like, I mean, this is not a good example because it's already price continues to drop. So say, for example, there's an entry down here, right? I know there's no entry, But say, for example, price comes down right here. And say it already hits TP. I know there's no entry there, but say it hits TP right here, and then they miss it. And they're like, oh crap, I could just re-enter late. So they wait for price to push up right here. Use this as an example. So price already hits TP, and then they try to enter the trade like right here, right? Super late because they aren't following it. And then you see how price pushes up, they end up getting stopped out. So short answer to your question, Hussein, is yes, you can follow live sessions, but you should anticipate the moves, because if you're not anticipating it, you're going to miss it. You're going to FOMO into like a late entry. I see a lot of people do that. That's why I'm just giving you the heads up, because it's a common mistake that a lot of people make when they're not actually, like, if they don't actually follow the strategies and don't know. Let's see. Hussein said, yeah, I meant to follow your trades and make money and keep learning, because psychologically, if I follow you, I won't do. So Hussein said, so because psychologically, if I follow you, I won't revenge trade or FOMO while following you. I'll say it's easier said than done. Like, it's easier for you to say that, but when you're trading live, you're gonna FOMO, you're gonna revenge trade. Like, it's gonna happen. It happens to everybody. I tell everybody, like, I'll tell someone, like, don't take this trade because it's risky, and then it hits TP, and then they still enter it after because they revenge trade because they FOMO into it. So yeah, I mean, if you want to think that way, you can think that way, but I'm gonna tell you, like, firsthand experience, like, I've worked with hundreds of traders, and everyone says the same thing. They're going to say, oh, I'm going to follow exactly what you do, or I'm going to follow exactly what you say. And 100% of them don't follow what I say. But I don't think there's been one person I've trained that has followed what I said ever. They say they'll follow, but you look at their account, they have all these losses, and I'm like, okay, where'd you get these losses if we didn't have any losses in like the past month, right? And they're like, oh, well, and then they have some kind of excuse. Not to throw Martha under the bus, but Martha kind of had the same problem like in the beginning. But we fixed that, or we're working on that. So, Martha's probably one of the more recent people that I've kind of worked with, and we try to like figure out, solutions to her issues. But she's like one of the people here too, and she's just like everybody else, right? Everybody's on the same path here. So like, it's okay to make mistakes, but revenge trading and FOMO it's gonna follow you no matter what. Like, I still revenge trade sometimes. Luckily, they work in my favor, but I still make mistakes too sometimes. Like, I still FOMO, I still revenge trade, even though I teach people not to. Luckily, the market always tends to work in my favor, but yeah, exactly. Martha said, Sean, where did you get that from? Did I teach you that? Yeah, no, we're gonna blame Sisuk for that, because Sisuk's the one that taught you that, probably, right? We're just gonna say Sisuk, because Sisuk was your mentor, so I'm gonna blame Sisuk for all the misknowledge that you got. Sisuk's cool. Sisuk is just a little intense. So if you guys ever work with Sisuk, he's gonna get upset with you. Just keep that in mind. He means well for you, but he's gonna get really upset with you. And it might seem like, or it might sound like he's attacking you, but that's just how he talks. He just really wants someone to he just wants the people that he's mentoring to do well. Yeah, no problem, Hussein. No problem at all. Yeah, exactly. CJ said he's not attacking, he's just passionate. He's really passionate because he wants you guys to do well, and then when you guys don't listen to him, he gets upset because he's like, man, why don't they get it, right? But it's easier said than done. I mean, I could even say the same thing for myself. All right, so let me scroll up real quick. But yeah, Hussein, you can follow me as much as you like, but just keep in mind that in the future, you're gonna make mistakes. It just happens. Yeah, and said I've started a new challenge, so I'll definitely post profits in the group from now on. I'll keep you updated on my progress for sure. I'm just gonna stick to the trading the live session liquidity pushes, and maybe a high level momentum scalp if you take it. Yeah, no, definitely. I think that's probably your best option. Because if you just take the liquidity push on open like I do, and you use proper risk, you know, from the data that we've had so far, it's like it hasn't lost like pretty much all month as long as you like take the proper ones. Like don't take the ones around news and don't take the ones that I'm considering risky. Or if you do, just take them for a smaller lot size. I mean, a smaller TP. But I think it should be good because even if you lose a trade, you'll probably make it back on the next day. And then you'll go from like break even to profit to profit to profit to maybe like one loss and then back to profit. So yeah, I think if you want to do one trade a day, I think you'll be pretty much solid. Hey T, how's it going? All right, so if there's any other questions, guys, feel free to put them in the chat. If I missed any, just let me know. I think I might have missed all right, so I didn't miss anything here in the Zoom. Let me check the YouTube real quick. Barty's asking, as you mentioned about first class Forex funds that you know the owner, how much does it cost to run a funding company? And will you also start next year? So, I mean, personally, I don't know how much it costs really. I believe it costs like about, and I don't think this is how much it really costs, but it just costs this much to get the company started and, buying contracts and stuff like that to like set up accounts. I know with first class Forex, it probably costs maybe like 100 to 200,000. I don't think it costs that much though. I think that's how much it costs to like open up an office and hire people and open up accounts with like a brokerage and stuff like that. But I don't think it really costs that much to open a funding company. It's actually really cheap from what I heard. Like you can white label stuff. That's why everybody has a funding company now. If you guys have noticed, like every YouTube trader that you follow has a funding company, which is crazy. Doesn't necessarily mean that it's legit, but it's really not that difficult to open a funding company. The thing with me is that I don't want to open just any funding company, right? I don't even want to open a funding company. I want to open like an actual prop firm, not necessarily a funding company where anybody can sign up. So it's going to be a little more difficult and a little more time consuming and a little more money for me to open it because I want to have a legit broker. I don't want to use some BS broker from like the Bahamas or something, or like Madagascar. They have like crazy brokers out there, like located in like Madagascar. Like I don't want my broker to be from out there. I want to have like a legitimate broker. And they need to be able to handle like our types of trades. So hopefully by the end of the year, if not next year. I'm not in really much of a rush. You guys have known for now, I try to do as minimal work as possible and make as much profit as possible. So if I was to start up a proprietary trading firm or a funding company, it's going to take a lot of effort on my end. And I just don't have the effort right now. I'm just too complacent with like just trading and making majority of my profits from actual trading. That's why I don't even mentor anymore. I don't like to mentor people. It's just too much work. I like mentoring people, but it's just too much work for me to like sit down with someone and then teach someone one-on-one. I like mentoring you guys as a group, but not necessarily one-on-one. William said, I didn't know CSUK mentored. CSUK is, he's one of the mentors. He's very selective though. So you can message him and ask him if you want to be mentored by him, but he's going to be very selective. He's going to give you like a pretty long interview process. But if he does choose you, then he'll help you out. It's just, he's pretty intense. So just keep that in mind. Let's see, CJ says, so I've been trying to use a pivot as confluence. Does the body of the candle touching a pivot, a sign of reversal, the same way the wicks are, or do you see that as a sign of continuation? So the body's not so much, CJ. When the wicks touch the pivots, I see that as a rejection. When the bodies touch it, I don't really see as much of anything, right? Because you'll see right here, like bodies will break past it, but it doesn't necessarily continue, right? So I think the wicks are more useful when identifying rejections or continuations versus the bodies. Like you can use the wicks or you can use it as a break and retest type pattern, right? Like for example, so you can see over here how price is breaking past the pivots right here. And then you can see how this red candle right here rejects off the pivot. So price breaks and closes below it, comes back and retests. Plus you got a sell signal. You know, odds of this dropping at least the size of the candle are very likely. You can see right there, it dumps right past it, the TP. So, you know, a lot of people use wicks as a confluence, but then again, you don't want to use what everybody's using. I think they work, but you know, I've used this. I've mentioned this a lot of times before. You kind of want to look for little inconsistencies that other people aren't doing. Like break and retest is solid, but a lot of people use that, so it's like it's not as useful as it used to be, in my opinion. That's just, you know, it's just the way I see it. But they still work. Like for example, here, price broken close past the pivots, retested right here, continuation. But it doesn't always work that way. So just you know, keep that in mind. CT said let trade setups come to you. Might be one day, might be one, might be none, might be 6. Anything else you're taking yourself is into a non-rule based entry. Yeah, so if you guys read CT's message right there in the Zoom here, I'll read it again out loud. So CT said let trade setups come to you. Might be one day, might be none, might be 6. Anything else is you talking yourself into a non-rule based entry. If you're consistently losing, it's because you are consistently not following rules, period. It's not a trade calling service. It's a live trading room to help you see how rules are applied. You know, stop asking for signals or call outs, not that type of room. Yeah, and I agree with you too. See, like what CT just mentioned in Zoom, he just basically mentioned that, like, you know, you guys have to like really take accountability and following, you know, the strategies and understanding what you're doing. It's not a signal room, like you mentioned. Like this is not a signal service, right? It's not a copy service. It's not a signal service. It's just a live trading room. That's what it is. I trade live, and you guys decide whether you want to take the trades or not. So, you know, my main goal here is to teach you guys how to trade. Like I can give you guys signals, and you guys can see what I'm doing, and that's easy. But I actually want you guys to be sustainable traders. Like you guys to be able to trade using my strategies. And this is all part of the bigger picture, right? So when I start my proprietary trading firm, I want you guys to be masters at my strategy so that I can just give you guys money to trade, which would be my money, and then we all split percentage. So it's kind of like a funding company, except you guys are using my strategies, and we're all working together to be profitable. Because if you guys are using profitable strategies, you know, it's basically guaranteed that you're going to be profitable and you're going to be successful at trading. So this is like a smaller piece of the bigger picture. Smaller piece is me teaching you guys my strategies. Bigger picture is like eventually I'll handpick certain people who are really good at trading my strategies, and then you guys can trade for my firm. So we all win. Hussein said, were you always using low reward, high win percentage strategy, or did you take high reward like 1 to 2 or more? No, I think the highest I've probably gone was like 1 to 1. I prefer to trade high win rate strategies. You know, everyone's trading style is different. It's like I mentioned before, like during one of the live sessions, or I think the previous mentoring session, like I don't like to lose. I don't like to lose in anything that I do. Like my mom never raised me to be a loser, right? So I'm not here to lose. So like for me, it's like every time I trade, I'm always anticipating to win. So I never was okay with losing. That's why I trade high win percentage strategies. If you guys look at my trading style and the way I trade, like we barely lose. If you guys look at the results for the month of May for live trading, I don't think we lost a trade this entire, or maybe we did. Yeah, we haven't lost a trade this whole month. So for the whole month of May, we have 12 wins and 0 losses. Like I could have taken like 24 trades and maybe have like 10 losses or like, you know, 5 losses. But I'm all about quality, right? I'm looking for quality entries. So for me, that's just the way I like to trade. I've always traded this way. I've always been this way in everything. I've been competitive in like everything I do, whether it's sports, you know, my previous job as a lawyer, when I used to like fight cases and stuff. Like I would never lose. I always found solutions to things. Same with trading. Like with trading, you know, it carries over. So I mean, it just depends on your personality. If you're okay with losing, then it just depends on you. Like everyone's a different type of trader. I know a couple of traders who like they'll lose like 100 trades, they'll win one trade that covers all their losses for like a whole year. You know, some people are different. Some people are okay with losing. For me personally, I'm not that type of person. So that's why I've always traded either. I mean, it doesn't necessarily matter what your risk to reward is. It depends on like how you're able to execute. So, you know, my trading style is not for everybody, but that's completely fine because I don't want to be like everybody. Like if you were to trade like everybody else, you wouldn't be that consistent. You wouldn't be that profitable, like from my experience. Because the thing is, like once you start trading like what everybody else does, the market makers start to see this. Like they know what everybody's doing. So if everybody's trading supply and demand, they're going to go against you. If everybody's trading support resistance, they're going to go against you. Not a lot of people are okay with trading negative risk to reward or trading these types of momentum strategies. So I think one book that you might want to look at, Hussein, is Trading Wizards and Unknown Trading Wizards. So there's Trading Wizards 1, Trading Wizards 2, and Unknown Trading Wizards. If you read any of those books, you'll see that a lot of those traders there who are like some of the best traders in the world, a lot of them don't do what other people are doing. They're doing something completely different. And that's basically what I'm doing too. I'm doing something completely different from, you know, majority of the traders out there. Yeah, because I don't think I've come across anybody that trades like me. I mean, I try to find people who trade like me so that we can exchange ideas, but I don't think anybody really trades like me. So. Yeah, Hussein said, yeah, all the YouTube gurus suggest 1 to 2 on YouTube, but they don't stream live like you. They don't stream live because they lose a lot of trades. So like for me, I stream live every day and I win consistently. A lot of those traders that you mentioned, like they don't stream live because if they stream live, they'd have like 100 losing days, right? They just lose every single day. And then if you guys ever watch those types of videos, they post like one video and they're winning. But if you were to watch them trade every single day, they would lose every single day and then have one good day, which would probably make up for those losses. And then people don't want to see that, right? People don't want to see losses. It's just not it's bad for morale. Like if I was to lose trades every day, I'd like be sick of trading. I wouldn't even want to be a trader. But since I'm always winning, you know, it's always a good feeling. Like you guys know how it is. It's a good feeling to win. Whether it be winning at trading, winning at a video game, winning at anything, really, it's a good feeling to win at whatever it is that you're doing. So, yeah, CJ said they're making most of their money from selling courses and delayed signals, and it's funny. There's like because you know I know a lot of the people in the trading space, but yeah, the delayed signals. It's crazy because before the funding company, a lot of people try to create these signal apps, and I'm sure you guys have seen them before. People created like their own applications for like the iPhone and stuff, where they would just they would send the signals there. But it's crazy because they would send a signal, and then the trade would hit stop loss, and then they would post like TP hit. They just wouldn't count the stop loss. So yeah, I mean, just be careful with who you learn from, guys. I mean, even if it's me, be careful learning from me, right? Check my trade history and like look at like the way I trade. Like I literally, I want you guys to like literally go back and like look at my stuff because it's like it just gives me it's a proof of concept. So like that's why I record everything. Everything I do is recorded. Like all my live sessions, all of our results, all of our mentoring sessions, everything's recorded because it's just proof of concept. I actually like when people like troll me because when they troll me, I tell them to go look at the videos and then they look at the videos and they're like, oh, sorry for trolling you. Like, I want to be part of your group and I want to learn from you. I'm like, all right, well, you burnt that bridge. So good luck. It's just, you know, it's just funny. The trading space is hectic though. So just be careful when you guys do learn from other people or even learning from whoever you're learning from now. Just make sure that you're actually learning from somebody that does what they're teaching. Because like I apply my strategies. I've seen a lot of people who teach strategies and they don't even apply them. Like a lot of the YouTube, like I don't want to call anybody out, but there's a couple YouTube traders out there, like they'll have a course up. They'll have a course up, and then you learn from their course, and then you watch their videos when they trade, and they're not even applying the strategies that they're teaching you, which is crazy because like a bunch of people are buying them, but it's not even what's being applied. So yeah, CJ said Sean likes troll so he can exercise his prosecutor skills. You know, look, I kind of do. It's just like proving somebody wrong. I think that was like probably the fun part about being an attorney. It's like when you interrogate someone and then you kind of just like if someone was to say that they got hit by a car, and I'm like, all right, I got this video here. You didn't like, is this you like faking getting hit by a car? And then they're like frozen, like what? It's the same with trading. It's like someone will say your strategy doesn't work, and then like, all right, well, I guess this TP doesn't work or this TP doesn't hit, and then it hits. And you guys have seen that before during these live sessions. But all right, guys, I think we went off track for a long time here. So I think we're going to wrap it up. If you guys have any other questions, feel free to put them in the chat. You know, I'm free to hang out with you guys. If there's any other questions that you guys want me to answer, just go ahead and drop your questions. You know, my goal here is to help you guys out. So whatever you guys need help with, let me know. And I can clear up any confusion or help you guys understand things better. But for the most part, I think we're pretty much done. We've been on the session for a little over an hour. Usual time for our mentoring sessions. But yeah, I think that's about it. Yeah, no problem, Sam. So, all right, guys, have a great rest of your day. If you guys have any questions, feel free to message me on Telegram or email me, Sean@KodiKaiTrades.com. Again, if you guys are new here and you guys want to learn the strategies, it's available to you. Just go on the website, KodiKaiTrades.com, and click on unlock the free access, or, you know, watch any of the previous live sessions. So, all right, guys, other than that, I will see you guys back here tomorrow for the next live session as we continue on with this trading week. Tomorrow is Wednesday, May 24th. We got about 3 days left in this week. So hopefully within those 3 days, we can make a bit more profit before we wrap up the month of May. It's about to be June. So, all right, guys, other than that,